Ta-da!
Hi,
Today we have
everyone.
help. Oh, anyway, what time is it, Carrie?
Oh,
Is that your attempt at
sad
humor?
time.
That was good, though. That was
Yeah,
good. That was a quick
it's
improv.
sad time.
You could be a
It's
little.
sad
There
time.
you go. Okay. Now I'm reasonably happy. Anyhow, we are going over. This is the most interesting report um, that we've done in a while, and I think you should hang on to this report because we were kind of talking about what was going to happen in the coming months, and I think some of the things we came across have now been realized. So let's see
Hmm.
what some of these numbers look like.
Yeah.
And they're not very impressive, actually, right? I mean, we're going to say it right off the bat. They're not impressive,
Yeah.
and it's kind of expected. And my live has not come live. Yeah, there it goes. I got to make sure I turn this down a little bit so I don't get like the feedback that it's like.
Oh yeah, we don't want
So yeah,
that.
okay. Anyway, so we have a whole bunch of stats to go over. So this is basically the Staten Island real estate market report. Once a month, we do this at the beginning. Usually it's like the first and second weeks. We're probably pushing into the second week. Very busy, which is good. Busy time. But the big thing is that there's big news in this report that probably we haven't said in a while. I think since maybe 2023 there was a little downturn. This report shows that the numbers did not come in quite on the uppity up. So let's, which is a little trend breaker. We've been up for quite a few months, and now things are beginning to. I mean, there's no cause for alarm. So, but it's definitely showing that things kind of have reached their climax in terms of at least in some of the leading indicators. Prices are still up there, but let's get into it, Kerry.
Yeah.
What do we got? Were you surprised by this report?
Yes, I was.
Okay, I'm sure you are.
Yes. So let's start with the average days on the market.
Mm-hmm.
The average days on the market have decreased both year over year and month over month. So year over year has decreased 9%, and month over month it has decreased almost 7%.
Okay. That's on the.
Days on market.
Okay, I have 9% and 8%.
No.
Are we looking at the same thing?
Yeah, 9.33 and 6.85.
Okay, sorry. My glasses aren't good. Okay, I just wanted to make sure. We read these stats as they literally come off the press. So we basically throw right out from the printer behind me. Yeah, so days on the markets, this is a good leading indicator, indicating that things are obviously still moving in the right direction. In terms of, you like to see days on the market decrease. 9%, it is, but the funny thing is that even with the days on the market, we're going to kind of swing into months inventory a little bit because so when you're going to, obviously you may bring this up, but there's a 15% increase in months inventory, even though time on the market has gone down. So really what's happening is there's more houses on the market than there were in the prior month and the prior year. And the absorption rate is now up to 4.74. Now, I was just kind of want to talk about seller buyer market where the threshold is. We usually look at 6 months as being the benchmark, meaning that usually if you're north of 6 months, it's like indicating there's a buyer's market. But it's creeped up. This has been creeping up for a while now. And I think one of the next stats, and some of these numbers sometimes they come in a little like disjointed, so it's not a pure tell on everything. But there are signs that it seems to be slowing down a bit. And in this last report, quite a bit, based on the fact, even though days on the market have come down 9%, the month's inventory number is something that I think, which is the absorption rate, seems to indicate that things have slowed down a bit and houses are staying on the more people have probably put their houses on the market, they're staying on the market, or what we call unsellable inventory is staying on the market. So it's not actually being reported on the cumulative days on the market because they're not selling. So these are, when we look at cumulative days on the market, we look at the time a house actually sold. So if the house didn't sell, we don't know how, that's not really factored into this report. So let's say a house goes on the market, didn't sell, or maybe it's still on the market and hasn't sold. It hasn't been factored in. So when I look at months inventory, I get a little bit more, a better benchmark as to where the market's heading, because that's like based on the current amount of houses that are on the market, whether they've sold or not, and it gives us a little clearer indicator that things are a little bit touchy as far as what the market's doing right now. And that's not something that the New York market, or at least the Staten Island market, which is reflective of the New York market, has seen, but it's been seen in other parts of the country. So let's continue on that. So the month's inventory number I already said is up 15%. So you can get on to the next one, which is the sale to list price ratio.
Yes. So the sale to list price ratio is up year over year 0.10% and up month over month 0.20%.
So basically 0.1% on the sale to list price ratio. Nothing, that's basically flat. So basically the sales to list price ratio went from 98.2 to 98.4. Now that's something we look at because we want to see if there's more people giving discounts, that's where it would start to show up. So it's not totally all negative. This is one of the more positive indicators that, things are still going in the right direction. Because when we look at sales to list price ratio, it means how much the seller is willing. When you start to see really a tailing market, you're going to see that number go down, like in the 90. I mean, I've seen them go down to as low as 93, 92 during the financial recession of 2008. Now it's now we're looking at 98.4, which is healthy. I mean, there's nothing there that indicates like we're experiencing really like a downturn to the degree that like people should be nervous about. I think there was just I really think this report is reflective of the market dipping. There was a big correction in the stock market. And I think what happened was they took a little caution in terms of like where the market was heading. And they took a little pause. I think this is the report that reflects that. So we'll see how that pans out, but it's flat on the sale to list price ratio.
Yes. And so the sold medium listing is up year over year almost 3%, but has decreased month over month almost 8%.
Yeah. So month over month difference. The sold median listing. So this is what the listing price was when it sold. So this is the average. This is the median. So it was at $650 last month, which is down from the month prior, which was $704. So this, and I've said this before, a lot of people have gone to the co-op condo route because of affordability reasons. We've seen an increase in activity on that front as people have kind of not put themselves into the affordability crunch of getting a bigger house. So they've kind of dropped themselves down into the bracket of buying small, staying small, but purchasing something. And I think that really, that's indicative of the affordability crunch, meaning that the sold median listing, although it's down from 704 to 650, it just means that people are purchasing houses that are cheaper. It's not an indication the market's going down or anything like that. And you'll see that as we get further along through the numbers, you'll see that bear out.
Yes. That leads us to the pending average listing that has increased year over year 7% and month over month 7% also.
Yeah, a tale of two markets. This is the interesting thing about this market is the pending average listing is still climbing. So meaning people are going into more expensive housing. That's clear in this report anyway. So if anybody is thinking that the weakness is, if there's any weakness to be extended, it's not extended in what people are willing to pay for a house if they have the money. So that's a big difference from the sold median listing. So the pending average listing now is up 6% year over year and 7% on the month over month. So if there is something people like, people are willing to pay the price. So I don't want to get anybody confused that if there's some other factors out there, and that's on the pending side. So this is the more recent data. So we're going to be looking at that, and I think that's where we're kind of on a little course correction, just kind of like what happened with the stock market. The stock market's back at record highs now. The real estate market will move in conjunction with the two. So the fact that the pendings average listing is up is kind of showing that there's been a rebound that's more likely to show up in those data numbers in the next couple of months. So anybody who thinks that things are turning around, this is not showing that that's really there yet. But we'll see how things plan out in the next few months.
The sold average listing has increased year over year 15%, but decreased 5% month over month.
Yeah, that's one of the more interesting numbers
Yeah.
in the stat report, right? I mean, that's one of the more blaring. But the month over month difference is down 5%. And like I said, some of these numbers are revised, so I want to make that clear. Some of the data sometimes comes in depending on when we catch the data.
Yeah.
It comes in a little bit later or earlier, so there may be some minor differences. But for that, we're saying the sold average listing 15%, so meaning that people are still buying more pricier houses. The biggest difference in this report was that people took the sold average listing, the ones that did sell, was down about 5% on the month over month, showing that there was a period of weakness developing. But is it truly indicative? We've seen this before in other reports. Is it truly indicative of a swing in the other direction? By the looks of the pending average listing versus the sold, which the sold is like it's already happened, and the pending is what's going to be happening in the future. We're not at any point that I'm kind of like thinking that this number is going to skew downward in the next few months based on the data that I've seen here. I've done this for a few years, and usually we look at that pending, we say, I don't think that's something to quite concern ourselves with yet. We'll see how it plans out in the next month, but it looks like by the pending average being up 7%, that things have kind of swung back in the other direction a bit. But that's something we'll watch. It's one of the things. This is definitely a report that's causing you to pause and say not everything is like looking 100% rosy as far from the home seller side. And I think for buyers, I think that's kind of they might have seen a plateau here. This may be I've looked at the charts. The charts have indicated that we've kind of plateaued in the market. I don't really see much greater appreciation, unless you're in some places in New Jersey, of course. But and some places in New Jersey may be swinging the opposite direction, and we'll see that next week in next week's report. Gab had said to me she wants to look at the South Jersey numbers next week. We'll know exactly what we're looking at, because that market kind of like moves in two directions. Monmouth and Ocean counties move kind of separately. We look at the Ocean County market to be a little bit more volatile of a market than as you move northward, you don't get as much volatility in the market. So, because it's just as further away from the metro area. So anytime you go further south, I always say like freehold's like the line. You start going south of that, the market becomes a little bit more volatile depending on how the general consensus for the rest of the country is, which hasn't been great, by the way. The markets, real estate market, like in places like Florida and Carolinas, have seen decreases. So, which is not the greatest like foreteller of like maybe some of the things that maybe happen in the future. I don't know yet. We'll see.
Yeah. Sorry.
Okay.
The new average listing has increased almost 2% year over year, but decreased 2% month over month.
So the new average listing is coming up on, now, when we talk about new averages, it's what really basically what we look at is determining, like when people go on the market, and sometimes we'll see the data here. This is pretty good, so people aren't really over. There's not really. I always say this. Sometimes in people advance their idea about what their values are by listing much higher than they would otherwise. This report kind of says they've kind of taken a little bit more of a tempered approach. So it's only up. So people have put their house up. It's at 813, which is high nonetheless. But it is down month over month about 2%, 2%, and basically 2.5%. So people have come down on the number that they're kind of expecting for the house. So they've come to some understanding that they're not going to really go overboard in terms of pricing their house when it comes on the market. Not a true tell. It just tells that people have an idea about what's going on and they're being a little bit more appropriate. We've seen these numbers flex quite a bit to like 8, 9% when people are just like ridiculously overpricing their houses, and it's skewing the numbers by quite a bit. We're not seeing that here. We're seeing people take a more tempered approach, which is the right way to go about it because it matters in the terms of a sale. This really gets interesting now. Now we really start to get some interesting numbers here.
Yes, so that would be the sold average sale. The sold average sale has increased year over year almost 15%, but has decreased 4.48% month over month.
4.5% basically. So the sold average sale price was down 4.5%. Okay, that's notable. So the year over year difference has definitely come. I mean, the year over year difference is 14%, which is actually better than it was in 2023, to be honest with you. So 2023 was not the greatest local market. 2022 into 2023, things when rates almost approached 8%, it really took a ding on that. We took a ding on prices a little bit, but this year is indicating that it's 15% year over year, which is way over average. And then, but on the month over month decrease. Now, this is what's happened in the past. I want to just say this is closed sales. So we look at closed sales as being like what's happened. I don't know what this is going to look like moving forward. We're going to look at two other numbers, which is pending listings, and that was not impressive either, and really a stark difference from what we've seen in a while. And this is where I have some concerns in terms of where this is developing, because there are some things in these numbers that I don't like particularly, and we're going to be moving into them now. This is where the meat and potatoes of this whole report. Of course, we have to save the best for last, right?
Yeah,
I mean,
yeah.
You have to.
You got to save the last for best.
The last for best. It's the best for last.
The best for last. Sorry.
You've had a long week.
I have.
You were sick. You were sick the week before.
I was
sick. And then you got sick again.
And then I got sick again.
She was bitten by some type of mosquito or something.
Yeah, that was horrible. So I'm like acclimating back to normal.
What is normal for you? We're gonna. Do you have anybody have any questions you want me to ask Kerry?
Yeah.
We could ask you. We'll raise the TikTok crowd for that. But the biggest thing is what is going on in these next set of numbers that I don't like.
Yes.
Because it's really getting interesting.
Mm-hmm. So that would be the sold medium sale. That has increased year over year. I have here almost 5%, and month over month it has decreased almost 7%. That's
quite a bit. So the 7% number, month over month difference in, and there's a couple of numbers here that I don't, the 6% drop in the month over month. This definitely coincides with some of the end of year, and you know what? I can't say when you're in the side of the business, you know when you know. It's kind of like you feel it. You could see it. Um, it's definitely not the smoking market it was like last year at this time. It was quite different. I just looked at a chart of last year versus this year, and what concerns? I'll tell you what really concerns me here is this is the thrust of the market, and this isn't great.
Mm.
It's the really like this is the time of year where like you expect like activity really to be up there. This is not great, and that's the thing that kind of so like there's no like you look for momentum in the market, and this report has not, based on some of the charts that I've seen, it's not showing that momentum is really strong, and it's not something you want to go into like fall and winter with. That's the thing that always concerns me. That you go into the fall and winter, and it's like, is this foretelling? But I do think it's very rate sensitive, and I think that's going to be depending. But I do think that what happens is, like everything else, home affordability has been the problem for a while, and it continues to be until they get inflation numbers to where they make sense. And I don't think that's going to happen, to be honest with you. I think inflation is going to spike up again. I have my own reasons for that. Because I still think that probably some of the spending bill that we're seeing is supposed to be adding another $2.5 to $3 trillion to the deficit, and deficits are not good for interest rates. And we got to find a way out of that, because I think that the treasury bills that are currently on the market, so T-bills is what the government is used to finance its debt. As we continue to go into debt, a deeper hole from 37 million to maybe 37 trillion to 40 trillion. The sovereign debt crisis can take a toll on rates. So, and what happens is that when the country takes on too much debt, people get weary, like the long term of holding 10-year treasuries or longer term bonds. This is why interest rates, I don't see particularly coming down much, because of the fact that they haven't really solved that piece of the puzzle. And I think they have to solve it in order to really get treasury bonds to be purchased more, which is really the driving force behind why rates come down. Quantitative easing, meaning the government buys back its 10-year treasuries to keep rates artificially low, which is something of modern economic policy. They did that to kind of stimulate the economy to keep rates low, so the government would actually buy back its own debt. Not the government, the Fed. Two separate things. The Fed would buy back treasuries to keep rates low to stimulate the economy. That's, I don't know what. Well, we won't get to that one. You want to know what that says?
No.
Okay. You're not. Nice try, though. But like I said, one of the things is that I think that's where we're seeing kind of numbers. The debt situation is not helping interest rates. But let's see how the next few months pan out. Let's go to the next one.
Active listings. Active listings have decreased year over year about almost 14%, but have increased month over month 7%.
Slew. That means that 7% increase month over month. Typical this time, so some of that's seasonal. Down year over year, 13%, which is okay. We're not talking about, this is not something that's happening in Florida for sure, where listings are way above pre-pandemic levels. But it's elevated month over month. Not much to do of nothing yet there. So what I have to look at is what next month's inventory situation looks, the absorption rate, which is a little bit more indicative of what's going on, to see what's happening there, and the sold to list price ratio, what's happening there, to see if there's any breakdown in those numbers. But nothing really there. It's still a very low inventory situation. 900 homes on the market is not exactly the pick of the litter. And I'm going to tell you right now, if anybody thinks that even in this report that a well-priced house isn't getting multiple offers, they're fooling themselves, because the market still has a strong, it has a very, very, how do we say, robust market for houses that are priced within the right wheelhouse and the right location. So it's still much, and I hate to say this, even during the pandemic, even during the financial crisis, we would get multiple offer situations. People think like the whole market is like sinks and like there's nothing that happens. No, you have to be realistic, and when you're realistic with the numbers, you still get, you're going to maximize value to the degree that you can. But it's something that we have to look at. I'm not convinced in this report that something is, this will see a bounce back, and I really do think that it's indicative of the slump that the housing market, that the stock market faced a couple of months back, and this is kind of reflective in this report. And the next report may look kind of like this, and then we probably could see a bounce back a bit. We'll see.
Yes, so the new listings have decreased year over year 2%, and also month over month have decreased 0.75%.
Okay, so that's on the pending side, right?
That was the new listings.
Oh, new listings. So it's down on the month. Yeah, seasonally, a little bit down. I mean, you'd like to see a little bit more, but if there's any change in the market, there's not more inventory coming up at a rapid pace, which is something we'd like to look at. Is the market seeing a pace rise? Like, are we seeing more new listings coming on the market? This is saying no. And usually if there's like, and that's why people are like, a crash could be, no. When you see a lot more new listings coming on the market very quickly and rapidly when the markets are changing in the wrong direction. That's not anywhere indicative of anything we've seen in this report, at least. People, it's actually down month over month. And the new listings on the year over year is down almost 3%. So people aren't in a rush to sell. So don't kid yourself. Some people want to say, oh, I have to move. The people that have to move versus the people who want to move and will hold out. I think there was a report today in MSNBC, CNBC, excuse me. I want to confuse that. What's happening is that a lot of people are withdrawing their listings from the market because they're not getting the prices they want. They'll obviously pull them back if they don't sell, which is something that's happened. We've seen it happen a couple of times, right?
Yes.
Right? From the catty corner over there. Yep. They don't get the number they want, or they get more than what they want and they get scared. We've seen that too.
Yeah.
You want to weigh in on that, Cat? Nope.
No comment.
You have an extra person in the room today. So what's the next thing we got?
The pending listings. The pending listings have decreased year over year 15%, and month over month decreased almost 15% too.
I don't like that. That is the real dinger in this report. A 15% decrease in pending listings at a time when that's really not supposed to be happening. This is the part of the report that I don't like, and I a little alarming to read it, because I think that when you see pending, this is like the future. That's a notable 15% is a notable decrease, especially for like that time of year. Like, this is a month, we're going a month back. This is last month's numbers. We're coming to this month. That's supposed to be the thrust of the market. Okay, so where does that leave us? That's the part that like a momentum type of thing. That's not the best setup for like moving forward. And I think that's something that we have to look at. We're going to be looking at, because the other numbers are the pending listings and the sold listings are not good at all.
Yeah.
These are the two robust like things that are like making me a little uneasy. But I mean, I can't say that I didn't sense it because I knew it was happening, because I knew like I had said that things were like back in January, February. It was not great, but March even it was like March should had a little, but we've been very busy the last few months. So that's kind of turned a little bit. But the pending listings, we'll just do two of them and knock two birds out with one stone. Pending and sold. So the sold is what, 20?
Down 25% year over year and down 7% month over month.
Yeah, so that's not the total sold for the year, by the way. That's the total sold based on the same month last year. A 25% reduction. So now the numbers were revised a little bit. So I think we have it at 199. I think the last report we had it at 203.
Yeah.
Let me just confirm that. Pending, sold.
Sorry.
There we go. 203. Not great. Not great. Let me just see what they were. Oops. There goes everything. Just to kind of get that in context, look at the numbers here in 2022.
Wow, yeah.
300, 357, 356, 383, 361. This is 2022. So this is a notable decline of the amount of sold listings year over year. We have we could actually see the whole entire thing play out in front of us.
Yeah.
To kind of give you a chart what that looks like. You probably can't see it, but this is the chart from 2022 to now.
Yes.
So we've seen the number of sold listings decrease quite a bit. That's actually the listings on the market. Is that a graph? But it's basically the same. So with the new listings, with the sold average dropping just a fraction, and I'm going to tell you, price is usually a trailing indicator of the market. So I don't want anybody to say, well, the sold average is up. Maybe things look great. The two numbers that stand out in this report is pending listings are down 15% on the year and the month over month. And it's not a time that you want to see that. So if you told me the one weakness that really blares out in this report is that pending listings are down pretty markedly from the prior month and the prior year. And then the sold listings are 25% decline. And I could tell, we could tell in the business, like a lot of agents are changing brokerages, and we see like a lot of people like, trying to retrofit. How do they say, like when the market goes down, people recalibrate their portfolio? I mean, I don't think it changes anything much to the degree that, depending on certain things, they think the fundamentals weren't right, and then they're just catching up to it because now these 25% is hitting some real estate agents in the pocketbook, that's for sure.
Yeah.
And some brokers. But this is why I say you have to be very cautious about how you move in this market, because a 25% decrease in sold listings is definitely, this is a market decrease. Month over month down 7%. Not something you like seeing going into May and June, which is not typical of happening in the market. Now, it's not to say that the market is bad and not everything is like, oh my goodness, the sky's falling. But what I have to say is that, and we've seen these in reports before, where there'll be a macroeconomic event, like the stock market coming down a bit, or that flash crash. I could tell by the phone calls we got, it's like, oh my goodness, what does this mean for me? What does this mean for me? Maybe I'm buying at the wrong time. And we hear these calls, and they're like, people will panic on this stuff. It's like, maybe it's not the right time. But here's what I'm going to tell you. All right. So let's look at it from the long term. And I think people should concern themselves with this. I don't think, based upon where we are, home prices are going to they're going to come down. What you knew about housing markets in the past are different than they are now, because we have a way of printing money when things don't work right. That wasn't something 2008 was, that was kind of there. So what I think is the main factor here, and really price appreciation, is inflation. And I think based upon everything that we've seen so far, that's really where I don't think there's been a real grappling with how to deal with that. I'm not saying we're seeing a breakdown in two factors in the market: the people that have a lot of money to do this, and so the market is becoming more, it's shrinking. So like it's like there's people with a lot of money and there's people with no money, and there's not much middle ground. And that's what we're seeing, and you can see that kind of in the numbers a little bit, where you're seeing these, like you're seeing, sold average listings at 700, and you see they're going up, and like where the sold average listing price is high. So what it's indicating is like there's part of the market that has plenty of money to do this, and there's part of the market that has a little bit. And this has been, so what happens is I hate to say this, but with inflationary scenarios, this is usually where like the break is. It's like the difference between the have and the have not gets a little wider. And that's something that I think we've seen in some of these markets, because you see like very high-end houses still moving. And this is not typical of real estate markets in the past that I've been involved with. Usually, like when the markets, if there's any weaknesses in the market, usually it's on the high end. That's not something they're seeing. I think that's what this report indicates overall, that the high end of the market still kind of moves at a pretty good clip. I mean, to a certain degree, but the other side of the market isn't as great. Depends. And I think location, there's still everything that kind of depends on a lot of factors. But what do you think?
I agree with you.
Yeah, that's the simple answer. But anyway, that's what we have for you guys, because I'm going to have to take calls. This was kind of an abbreviated session.
Yes.
Because we have a lot of business to do. Like they say, get off this damn live stuff so you can handle the business stuff. But anyway, it's good to talk to everybody and put feelers out there. We invite you to come to our ever-growing YouTube channel.
Yes.
Ever-growing.
Yes.
It is. It's growing. I'm going to say it's exponential, but we've had a steady growth pattern, and we're happy that, so if you're going and you like and subscribe to those channels, especially YouTube.
Yes.
I like talking to the mic. YouTube is doing great. And we're doing a lot of interesting stuff there.
Yes.
So, and that's what we have for today. And like I said, if you have a question, what should they do?
Give us a message on Facebook, Instagram, YouTube.
And Carrie's going to answer it personally.
Yes, I will.
I'll be sure of it. All right. So have a great day, all, and we'll see you next week.
Yes. Goodbye.